Hey, what's going on? This is Fred with the Fortune team, and I want to talk about our home prices finally coming down in 2026. So let me ask you a question. If home prices was really coming down, don't you think we probably would be seeing it by now? We've had higher mortgage rates for quite a while now. Inventory has improved in some parts of the country, and buyers aren't bidding aggressively as they did about 2 to 3 years ago. So it actually makes sense that people might think that this is the year price would begin to fall. But once you step back from all the noise, focus on the numbers, the situation isn't as simple as it feels. Yes, I would agree the market is shifting. Yes, things have cooled down just a bit, but cooling off and coming down are two different things. So let's take a minute to look at what the numbers are saying today and what does that mean for you if you're looking to buy and sell in 2026. All right, so let's start off with point number one. Let's see what the national data is actually saying about today's market. So the Federal Housing Finance Agency releases a quarterly house price index that tracks home values across the country. In the most recent report in quarter one of 2026, prices are still up compared to the same time last year. So the growth rate is much slower than what we've seen during the pandemic surge, but it is also still positive. So that matters because when people talk about a housing correction or crash, so what they're usually imagining is a broad national price reduction across all the board. And that's simply not what the data is showing. Now, let's look at Zillow. Zillow Home Value Index also shows that U.S. home values are slightly going higher than it was a year ago. Then we have Redfin's 2026 housing forecast. Redfin is actually projecting a roughly 1% growth this year. So it's steady and measured along all the other reports that we're actually seeing. So it's actually a very different environment from what we've seen in 2021. And it's also a very different market from what happened in the collapse in 2008. So when you step back and look at the broader picture, the patterns is kind of consistent. So growth is cool. Things are a little bit more balanced, but prices aren't falling nationally. So point number two, why it feels like prices should be falling. So homes are still expensive. Monthly payments are still high because of mortgage rates. So first-time home buyers are being stretched at this moment. So emotionally, it feels like prices should be coming down, but actually this is what's happening now. Higher mortgage rates cool demand, yes, but they also locked in many homeowners into a low mortgage rate a few years ago. So that limited a number of people willing to sell, coming from a 3% interest rate to jump up to 6-7%. They would consider that a pretty big jump. So supply never actually surged the way people expected it to. So in many markets, different pockets, we're still dealing with relatively tight inventory. There's not an extreme shortage like it was during the pandemic level, but it's also still not an oversupply either. And when supply stays tight, even softer demand isn't always enough to push down prices significantly. That balance is what is actually holding prices steady. So buyers are more cautious, sellers are more realistic, but neither side is desperate. And markets don't crash when both sides are stable. So point number three, what could happen in the rest of 2026? So looking ahead, most forecast remains conservative but steady. Redfin expects about a 1% growth through this year. Zillow anticipate a modest appreciation as well. FHFA data continues to show a year-over-year growth. So when several independent reports show the same consistent trend, that adds credibility to it. But it doesn't mean that every city is experiencing the same conditions. There are some pockets, especially in overpopulated metro areas, where prices have softened. And we may see a little more of that in specific markets too as well. Local conditions can vary on inventory levels, job growth, and buyer demand in that area. But nationally, the data does not support a housing downturn. So what we're actually seeing is normalization. So the market has shifted from a rapid acceleration to a much more steadier pace. And that's actually healthier long term. So point number 4, what does it mean for buyers and sellers? So what does this mean for buyers? If you're waiting for a huge price reduction, a dramatic drop in prices, the data is actually showing that that is most likely not going to happen. However, buyers today may have advantages that they didn't have a few years ago. And so you have less bidding competition, more inventory to choose from, and more negotiation flexibility. And actually, those factors could sometimes create more opportunities than a small price decline. So in other words, you might not see lower prices, but you might see better terms. And in many cases, that can have just as much as impact on your overall investment. Now, what does this mean for sellers? For sellers, this is no longer name your price market. So pricing strategy, presentation, and preparation matter more than ever now. So buyers are comparing more carefully now. They have options. That means positioning is everything. In most markets, well-positioned homes are still selling at stable levels. The sellers who win in this market are the sellers who priced realistically from the start and present their home in a way that stands out. So are home prices finally coming down in 2026? The data says no. Now, what's happening across the country and what's happening in your local neighborhood can be two different things. Real estate is local, and that's where the real story is. So if you're wondering what this means for your home value or your buying power, let's take a closer look at your market specifically. You can reach out to schedule a one-on-one strategy call, and we will build a plan that makes sense for you this year. Make sure to like and subscribe so you don't miss out on future market updates and real estate insights.